Perfect. All right. So, hello everyone, and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP Invest. And today, like every week, we are here to discuss what has happened in the entire week, what that tells us about the weeks coming up, and how should we determine our trades in the future with respect to the price action analysis. So as usual, we'll start with the 3 minute time frame of Nifty and progress higher. We'll move on to Bank Nifty analysis, and then we look individually first at the other sectoral indices, and then we'll look at the intersector chart as well. After I'm done with my discussion, I will be answering your queries. So if you have questions about stocks, or if you have general questions about the market, swing trading, me, so on and so forth, so general questions, feel free to comment them. I'll be happy to take them up as they come. But for stock requests specifically, as per SEBI's guidelines, I need to, as a registered analyst, I need to maintain records. So I will share a stock request form link with you in the comments. If you're interested in asking me stock queries, make sure you fill this form, properly mention the name of the stock and the cost price basis which you want to do analysis. If you have any additional question, follow-up question, you can include that in the comment section as well. So we have some participants with us on Zoom whose questions will be prioritized because they're registered members. And next time, if you also want to register and join me on Zoom for priority Q&A and interaction, then just join my Telegram channel. The registration link is posted there all the time. All right. So with that, let me share my screen and let's move on with the 3 minute time frame Nifty analysis. All right. So as you can see, here's the chart, right? Now, on this 3 minute time frame, you can see that I have marked this level of around 24,000 and I've mentioned something called the booster shot. Now, if you are in my Telegram channel, you already know what this is because I've added my analyst comment for the day. So we'll discuss this booster shot angle when we go to the 75-minute time frame. On the 3 minute time frame, what are we seeing? That the market declined over here around 1,000 points very fast. This decline was not surprising at all. This decline had been indicated on multiple time frames already. A negative divergence had forged on the 3 minute time frame, followed by negative range shift, while this peak was kind of getting forged out, right? And then we saw a massive gap over here, which is what I called the breakaway gap. And then we saw continued downside activity. Now, this level of 24,000 was mentioned as key support for the market. After this level got touched, there was a retest and a positive divergence appeared, which was a signal that the market may not decline any further and may give us a little bit of positivity. 2 days of no decline was how the 3 minute time frames RSI positive divergence got realized, right? What we've experienced since then is something that has better indications on higher time frames. So this is, for instance, the 15-minute time frame. When the 24,000 level on Nifty was touched, the 15-minute time frame also showed a RSI positive divergence, which indicated that we can expect positive activity for maybe 1 to up to 2 weeks. So we've already experienced that. Today, in fact, we saw that the market opened with a pretty good gap up here, came back to retest this blue zone and went up. Now, what is this zone with the blue outline, right? What is this? So actually, this is the place where the negative momentum ended. So you see this tiny little bottom over here on the RSI. If I draw a vertical line, you can see this is where the RSI bottomed out, right? So this was the real low for the 15-minute time frame. So real low. Now, this real low actually acts as a very good resistance or support when the price wants to come up. And typically what I've seen that if this real low gets breached and the price continues to move upward, then the base of this real low becomes the next resistance. As per this chart itself, this low was forged out of this tiny little peak. So this becomes the base out of which my real low got established. So now the price is going upward. I am expecting at least this level to get reached in the market. What is this level? It is around 24,800. So 24,800 becomes my new resistance. So I would say 24,800 to 24,900 becomes my new resistance that I need to look out as per my short term analysis. What is the higher time frame, next higher time frame telling us? Let's go to 75-minute time frame. And on the 75-minute time frame, you can see, if I just extend this price with to give it a little bit more definition, you can see the RSI peak was forged here. What is this? This becomes the real high, the momentum high that we experienced when the price was moving upward very strongly. Now, what is the significance of this real high? In the uptrend, what I have seen is that when this real high level gets established, so this is like a moving train, okay? Think about it like this, that this is the point where the engine turned off for some time, okay? Now, because the train was already moving, there was inertia, because of which the price continued to head higher. But this is not momentum, this is not upside activity backed by strong momentum. There's no engine power behind this. As a result, the RSI forges a leading indicator, it forges a negative divergence, right? Typically, what I have seen a lot of times in very bullish stocks, indices, when the trend is very bullish, that when this negative divergence appears, price has a tendency to go down to the real high to get like a booster shot. That is what I have mentioned over here. All of these concepts are in details taught in my swing trade training classes, if that is something you're interested in. So the price came down, got a booster shot exactly where the momentum subsided. And since it turned up from this level, can you see the momentum? It is continuing the momentum with the same, it's continuing the uptrend with the same momentum which we had experienced before the real high was forged. So this was a real high. This is where the price kind of got a booster shot, and now we are heading upward. So naturally, basis a 15-minute time frame, the very first resistance that we are seeing is 24,800 to 24,900. 75-minute time frame showed a negative divergence. RSI has come back to retest the level of 30, and it has retested the level, the real high level. So as long as 24,000 remains, it holds on. I my outlook is positive on the market, right? The movement that we saw today, the momentum with which the price rallied, is telling me that we can expect more activity, and I am expecting the level of 24,800 to 24,900 to get tested very very soon in the market. Let's move on to the daily time frame now. Now on this daily time frame, what do we see? So the RSI, let's hide this. We don't need this right now. So this RSI that you're seeing here, this RSI is telling us that the underlying momentum is very strong on daily. This tiny bit of correction that has caused so much panic in the market is not even something that the daily time frame registers as, even a lower low, because the most recent low, I would say, that was forged on the daily time frame was, to be honest, um, you can consider 23,400, but actually the low is 21,000 or 22,000 level. So the daily time frame, what it is suggesting is that
You are on mute on Instagram.
hmm, that is strange. You are correct. The mic activity. Let me check. Um, all right. All right, it's working now. So I just learned that Instagram was not working very well. The audio was not there. I don't know. Every day it's like one platform that gives issues, but we are back online. Perfect. Now, what do we have next? On the daily time frame, like I was suggesting, the low has been forged, and the low has been forged, or the low that we need to look out for as per the daily time frame, or a level that the price really needs to break for us to feel any kind of panic, is actually this around this level of 23,600 at the least. Why is that? Because before this massive rally started, right? So the momentum peak on the daily time frame is this itself. So the daily time frame is saying that, boss, my momentum is very very intact. You don't have to worry anything. You don't have to worry at all. During this kind of strong momentum, the maximum a stock usually retraces is to the base of the previous high, which is around the level of 23,600. And from the analysis that I've done on 75 and the 15-minute time frame, I don't see any reason why the price would decline lower than that, right? So here we're doing pretty well. Daily time frame continues to look super bullish. The next resistance as per the daily time frame um, is at this trend line, which is around 25,175. That becomes our next resistance, right? um, I also believe, as per the broad analysis, that what we have experienced since 4th of June is a very, very new rally. Actually, in my opinion, in my Elliott wave count, new rally started from 10th May itself. The 4th June fluctuation was a little bit of an anomaly, so I tend to ignore the wick side of that. Right. So this was one entire wave, and I think this is a ABC correction that is unfolding. So there is a possibility that after 24,800 900 gets tested, we might come back to retest this booster short level, which is around 24,000 rupees. We might also go down to test the previous real high around the level of 23,600. Right now, we don't have clarity. You need to understand that when the market finishes a 5 wave correction and enters the ABC correction, the readability gets a little bit affected because of that. And that is what we are most likely going to experience. But we are short term traders, we are swing traders. Our focus is entirely on making sure that we know the market directions and our bets are in line with the market direction from a short term perspective. So if we know that a 500, 600, 900,000 point rally is about to come, it makes sense to invest our money, take positions in not more than 15 stocks hopefully, and manage that position actively with active stop losses. So what I have seen is that when we stay with the market, it becomes very easy to make 3 to 4% portfolio growth every time the market gives a leg up, right? So right now, if you look at the Trade Together program recommendation also, we are close to 100% allocated in the market. Within the last few days, we've pretty much made our positions in the market already, and we are holding positions. So as this market rallies, hopefully the positions we've taken will also give a really sweet rally. All right, with that, let's move on to Bank Nifty's chart. So on the Bank Nifty, what am I seeing here? So the Bank Nifty doesn't, to be honest, look as positive to me as the Nifty does. There was a real peak on the 75-minute time frame, which was forged over here. And here I am seeing a strong resistance at the level of 51,400 roughly on Bank Nifty. But at the same time, if you see on the daily time frame, there is a massive negative divergence. And I think the real peak, as per the daily chart, is at the level of around here, 48,160 roughly. And I think Bank Nifty can retest that level before giving further rally. So I would suggest you exercise some caution when it comes to taking positions in banks. Now let's take a look at indices, other sectoral indices one by one. And we will start off with CNX IT. We'll focus on the 75-minute time frame only. So CNX IT, I think, has a very, very strong underlying uptrend unfolding with a momentum peak right here. And if you see, this peak has already been breached, strong momentum has started. So I think I'm very bullish on the IT sector, to be honest. Usually there is also inverse correlation between IT sector and the banking sector. So it makes sense that the IT index is looking bullish and the banking is not looking so bullish. So my focus is more on the IT sectors right now. Next, coming to the media stocks. Now, what I'm seeing on the media sector is it is trying, so it has created a bottom, and we've played some media bets in the last 2 months, 3 months, right? And I believe that this rally is going to continue. Media sector is very, very cyclical. So I think once this consolidation kind of gets over, I would expect the rally in the media sector to continue. Moving on to the realty sector. So realty sector has given a pretty good correction already. Now here I can see while the trajectory of the overall sector remains pretty positive. I am expecting maybe a little bit more correction here. To be honest, the correction or the upside that has started to unfold here has not been confirmed yet. So I need to see a little bit more confirmation before I can feel confident. And I think this can come down to kind of retest this level, the realty sector. So for now, also to be very specific on reality stocks, I'm seeing negative divergences, which tells me that for now, stay away. Let a little bit more correction unfold. I think this lower trend line can be tested. So another 5% decline in reality sector in the next few weeks, probably. So this for me is not somewhere where I'd be aggressive. Next, CNX Pharma. So pharma and hospitality have already given, sorry, healthcare have given very, very strong rally. But the index, the sector index is showing a negative divergence now, right? That being said, that being said, um, I don't think pharma is where I want to make fresh positions. Whatever positions you might have existing, excuse me, in your portfolio, you want to maintain active stop losses there, trail your stop losses properly, but avoid making fresh entries. Look for opportunities in the IT sector if fresh entries what you want to make, right? Same for healthcare sector. There's usually not much difference in the chart of healthcare and pharma. We'll move forward from the Alpha 50. Okay, let's take a look at the small cap 250 index. Very, very volatile index. Honestly, I am not a big fan. And I think it can give a little bit more correction. The momentum seems to be slowing down, and this entire rally has been stretched out. So if you see in small cap, it has a tendency to give massive rallies and then some correction and then rallies again. So I think this rally is kind of closing in on the end. So the risk reward ratio is not that attractive for me to take risk, and small caps is very, very risky, right? Same for the mid cap sector, overall sector. Now obviously you can make calculated bets over there. Be very, very stock specific. But if you look at the sector overall, it is really losing a lot of momentum. And I think this is where a real high was forged. Obviously, this is like a massive correction. I don't expect this to come all the way here. But if I see in between these two real peaks, I will have to consider that as a real peak. Right now, this is kind of a evolving, I would say, correction. I would expect the mid cap sector to decline to maybe 51,500. Before I can take any um, before I can look at the mid cap as something on a more overall basis. So this PSU sector, I've already been warning you that making fresh positions is not a very, very good idea. Momentum slowdown, exhaustion has been very evident for a while now, and I think this sector kind of topped out here, right? I think the negative range shift that is very obvious on the 75-minute time frame um, is an indication that it's better to stay away from the PSU sector, even though you might experience tiny little upsides of 3 to 4% on the overall index or even in the banks or the individual stocks. I don't think the risk reward ratio is very attractive in this sector on an overall basis. Of course, stock specific um, exceptions apply. Now, coming to our intersector chart, right? Coming to our intersector chart, now what I can see over here, so this is the CNX IT chart, and let's adjust this in this manner, right? So what I'm seeing is that CNX IT is outperforming the market, and I expect this outperformance to further continue. Um, Consumer durables, I would suggest you proceed with caution, because over there, consumer durables and FMCG both, I am not very convinced that they can give a reliable rally. Auto sector, I expect the momentum to continue. Realty sector, I think I would wait for another leg of correction before I would proceed. Um, Banking, I've already said banking, maybe private bank, maybe PSUs, maybe even financial services. I think they are exhausted. They've rallied a lot. Fresh entries strongly discouraged. Energy sector is giving rally, but energy, pharma, and healthcare, be very careful with respect to the fresh positions that you make. Let's also take a look at CNX metal. CNX metal, I think, has completed a correction, and I can see positive divergence building up. So I think CNX metal is also one sector where I would look out for fresh entries at this point. And if you also take a quick look at CNX Auto, so CNX Auto actually continues to look pretty attractive, and it has very strong underlying momentum, and I would expect that momentum to resume now from short term and long term perspective. CNX Auto continues to look very, very attractive for us, right? Okay, so with that, all right. So with that, I've discussed what I wanted to discuss with you. Let's now move towards Q&A. So I'll first invite our Zoom members to ask their questions. And side by side, I'll also open my stock request form. So if our Zoom members have questions, they can raise their hands, they can come off mute, or they can simply input their questions in the chat. Let's in the meanwhile take a look at what is happening on YouTube. And ET and Instagram. Let's see what's happening over there. So, as we continue, just quick reminder to join my Telegram channel. You can join my Telegram channel by opening your Telegram app and search Trade with Kavita. Now, when you do the search, you will see lots of fake channels with slight variations in the name. Be sure to join the correct channel. Just open and check out the content, see my analyst comments, you'll see my webinar links, you'll see my uh, other valuable posts. Oh, by the way, I want to announce this very important new update, the trade tracker. So the trade tracker is an in-house Google sheet that I give to all my Trade Together program members. So initially it would only it could only track stocks which had been recommended by me. But I realized that people don't only trade in the stocks that I am recommending, people have their own opinions and their own portfolios. Some of the members were also taking bundle subscriptions of my short term and long term recommendations plan. So, this version 3 of the trade tracker, firstly, I have reduced the number of columns in this. Secondly, I've made the screen space a little bit bigger. I've separated the information from the tracking sheet into a separate sheet so that you can get more viewing space. Thirdly, I have added a new sheet which allows you to introduce your own stocks with stop loss, targets, so on and so forth, comments, analysis into the tracker so that you have a common view of your overall performance and everything. Um, I have integrated the long-term plan as well for people who have bundle subscriptions. Also, for anybody who avails the portfolio cleanup service with me, will also get access to this tracker now. So initially, we used to give them something that was not a trade tracker per se. I mean, you could use it to track, but it wasn't like built very well. So this will help with all of that. So if you are already a Trade Together program member, so you have to be a subscriber of my services in order to get this trade tracker. uh, Now, why do you want to use this trade tracker? This trade tracker is basically the secret behind becoming a better and better trader. If you are suffering from biases, but you don't know what are your biases, if the market overwhelms you again and again, your analysis is correct, but your execution is not going right. Having a trade tracker doing past trade analysis is going to help you identify what are the patterns that you are repeating which are not serving you. Usually we tend to make judgments of we we tend to judge our performance on the basis of profit and loss, and that is a very, very bad strategy, because sometimes we can do wrong things that lead to profit, because we were lucky in the market. Now if we don't know that that behavior was a wrong behavior, we will repeat it in the future, as a result of which we'll experience a loss, right? Sometimes we do everything by the book, we do everything correct, and yet experience a loss. It is important to identify that you did everything correct, and the past trade analysis is going to give you that perspective that, hey, it was just market risk, and the market went against you. There's nothing you could have done. You need to be more forgiving towards your own self so that you don't discard a very good strategy unnecessarily. Right now, every strategy doesn't work the same way in every market condition. So we need to understand that there are so many moving parts that we need to keep our own strategy constant in the market, right? So find the market when so for it's very important to identify your own strengths, and within market, the dynamic state of the market, you identify which kind of market is the most favorable for you to apply your strategies in, and be ready to take advantage when the sun shines on your strategy, like that. So this trade tracker actually helps uh, under, like, remove that overwhelmed state and give you a path or a direction to follow. So anyways, that's that. So this Trade with Kavita channel is a very good way of connecting with me. If you're asking how to connect with me, I can see some people in the comments do that. So just join this channel. You will also get this link of connect with me. So this is a link on my website. You can visit this link and you can basically book a call directly with me, and then we can have a chat about how to help you progress further in the market. Okay, coming back, let's take a quick look. I can see lots of comments have come in on the Zoom session, so we'll prioritize those. So good evening to you too, Sahil. Do we observe negative divergence on the 3 minute time frame? So I suppose you're talking about 3 minute time frame RSI negative divergence on Nifty. So yes, there is a little bit, but I wouldn't be very, very concerned about this 3 minute time frames negative divergence, because even if this does kind of play out, I would expect the level of around 23,000, 24,400 to act as strong support. Because for a negative divergence to be very, very potent, I prefer it to be of this style. Basically, the right side peak, if it takes resistance at the level of 60, it's a more effective negative divergence in my opinion, right? This one on the other hand, so if you compare these two, you will see that the right hand side most in this case is not below the level of 60 yet. So the underlying momentum is still pretty strong. So even if this does play out, I would expect it to come back to basically 24,400 and continue upward. Narendra ji on Zoom is asking, does real high indicate RSI peak or vice versa? So Narendra ji, exactly, real high indicates RSI peak. So that is the point where the RSI peaked out. The momentum basically peaked out. That is the point of time basically where the engine that was supporting the strong price activity sort of shut off and the train kept moving out of inertia. So that is what the implication of the real high is. So Satvik on Zoom is also asking for the analysis of Bal Krishna Industries, and you want to look at the stock from the perspective of fresh entry. All right. So I can see that a bottom was forged here. So let's correct the colors to. So for my support resistance zones, guys, I've started using this color outline corresponding to the time frame on which I'm drawing it, and the color fill corresponding to whether I'm marking a support or resistance zone, right? So this, or a high or low. So since this is a real low that I'm marking on the 15-minute time frame, the fill is red and the outline is corresponding to the RSI on the 15-minute time frame, which is dark blue. So that's just a little bit of FYI. So if this level gets breached, right? So this is going to act as a potential resistance for Bal Krishna Industries, because I can see that the momentum has been extremely, extremely negative. If this gets breached, then we might expect another resistance around this level. So the 15-minute time frame is actually looking very, very weak, and the 75-minute time frame is also suggesting that sure, there was a strong rally, but the rally has been long gone since this one. And the see, what I was telling you, that the real high acts as a support level. So over here, this did act as a support level, but the price only managed to rally to the immediate resistance and then went into a massive decline. Now the trend lines that I've already drawn, so I can see this trend line acting as pretty good support. I don't know what this zone was, but let's see if there is a strong support that I can see here. So I can see that the real peak as per the daily was forged on this candle here, right? And then this also acted as support, and then finally a massive breakout occurred out of that one. From an immediate perspective, I really don't see why I would be interested in taking a long position in Bal Krishna Industries just yet. If this stock sustains above the level of 2865, and the volumes kind of return to the upside. So right now what I'm seeing is the volume is strong on the downside. This doesn't make me comfortable at all. And also this strong rally that you saw, the second half, the second or the later parts of the rallies did not see a lot of volume activity. So upside with low volume activity, downside with high volume activity is equals to stay cautious, not very, very bullish right now, maybe even bearish. So let's refrain from taking a fresh position in Bal Krishna Industries immediately. Next, take a look at Sanjay ji's request on Zoom for Hind Copper. Um, Hind Copper. So you want to know whether it's in wave B. Uh, yes.
Your screen is not shared on Instagram.
Okay. Yeah. Thank you. All right. So Hind Copper. So what are we looking at on Hind Copper here? Um, See, Hind Copper and even other PSE stocks, I'd be very cautious currently. If I look at the 75-minute time frame, I'm sensing a little bit of correctionary moves. So this is a real low that has been forged, right? Now this real low has been tested, which is good, and it has created a bit of a positive divergence as such. Um, Coming to the 15-minute, so 15-minute, what is trying to do is, so 15-minute showed a clear cut positive divergence, and since then it started to also go up a little bit. So Hind Copper is starting to give early signs of potential turnaround. And if I talk about the underlying trend, let's assess the underlying trend. So this was the real high, the previous real high. And what was the base of this rally? I would say the base of this rally was around here. Fantastic. So the base of the rally has already been tested, which is very, 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 very good. In fact, um, okay, before I say the next thing, I wanna kind of do this. See, when I'm drawing the real high and the real lows, now I'm more concerned with tracking the highs because it is actually the highs that get breached or the resistances that get breached and turned into support. So you see the base that I drew here almost exactly overlaps with my previous real high. So I'm going to take this previous real high as my true support zone. And I can see that the prices declined here, came back to the previous high, and this previous high is acting as pretty good support. So from a fresh entry perspective, so see, I don't think this is wave B. This could potentially, Sanjay ji, be wave C of the Elliott wave correction. So this looks like the entire correction, and this would be my count A, B, and C. This has the potential to be a fresh rally. So from a setup perspective, I would set basically these two lows as my stop loss. Which two lows? Again, just to give you a clear cut marking, this low and this low, right? So this would be my support. Leave a little buffer, set my stop loss around the level of 274, 275. And then where would my potential target be? Considering the underlying momentum is very strong, I would expect at least this high to get tested. Now, right now, the risk reward ratio is not favorable. It's a little bit on the higher side. So, a good strategy would be to set up multiple buy orders between the current market price and the stop loss level, and give the market an opportunity to give you an execution. Maybe this third one, I will move a little bit higher in between these two. So three levels that I'm basically choosing, just eyeballing it, 304, 299 and 295. So I will break up my allocation and maybe allocate 70 up to 70%, even maybe 50% of my total capital with these three. And once this stock establishes a higher high above the level of 330 rupees, then I will pyramid my position. Excuse me, I will add more capital to this. At any point of time, I will not allocate more than 7-8% of my total capital to this stock. Okay, so with that, I also want to kind of make another announcement, and this is for the new as well as the old members equally. So uh, so for the members, one little bit of change that I've introduced today is I have changed the way I used to give you allocation advice. So I have been so far giving you a range, key purchase 5 to 8% or 5 to 7% of a stock. Now going forward, I will give you a specific number, key buy 6%, 7%, 8%, 3%, 4%, like that. I'll give you a specific number. I will no longer give you a range. The reason why I'm making this change is because it was making it very difficult for me to track performance. And it was causing lots of formula issues also because of the tiny little hyphen and complicating my life significantly. Also, a lot of you have been demanding that I create a model portfolio basis all the recommendations that I've given in the various programs. So right now the Esteem plan is not taking any new subscribers, but the Elite plan and the Exclusive plan are. If you want to join the Elite plan, you need to reach out to me or my team. But for the Exclusive plan, you can simply visit my website, and the performance of the model portfolio built as per the allocation advice given in all these three plans is mentioned on the website itself. And if you want to maybe just see this Google sheet itself, you can visit expinvest.in/pastperf. This is the link. I will share this link on the, um, hold on. I will share this link on the chat as well. If you want to kind of get into the details of what are the recommendations that were given, how did they perform, what was the month on month, when did we beat the market, when did we not, so on and so forth, all the details are mentioned here. The more details you want, just keep scrolling rightward and you'll see. I don't think anybody has the time to go through it so much, but if you do, I have made all the data that you need available right here, right? Or even the link to the subscription pages can be found if you click on the header. So this is a little bit of alignment for all the members who, I know my Trade Together program members listen to this. So you will see a small change in the allocation. Instead of a range, you will see a specific number. And also, if you want to take a look at the model portfolio based built on the basis of the advice, actionable advice that is given, then you know the link that you need to go to. All right. So moving on with stock queries, we have addressed Hind Copper for Sanjay Ji. Next, Jasvinder is asking, please provide analysis of Syrma SGS technology. SGS Syrma. Okay. I have never looked at the stocks technicals before, but that's what I enjoy about the stock request session, Q&A session. I get to look at stocks which I otherwise wouldn't look at. So I can see there are trend lines drawn which suggest that the stock has been requested earlier, and I see that the um, this is good. So bit of a positive divergence is starting to build up on my daily time frame. This was a real low established. Since then, the RSI has been creating higher high, higher lows, whereas the price is creating lower lows or even retesting previous lows, which is okay. Correct? Going to the 75-minute time frame. So the 75-minute time frame is actually not that bullish yet. So it created a real low here, and then the price has come to retest this real low, but tiny little positive divergence. Okay, a more pronounced positive divergence on the 15-minute time frame. So I think this is a opportunity for fresh entry. You've entered at 414, so very recently. Good, fine. I think I would like to wait for the stock to stabilize above the level of 420 rupees here, right? This is where I would want the stock to kind of create at least one higher high above the level of 420 rupees. And if so, I wouldn't take a position in this because this stock is not part of my watch list, and I tend to stick to my watch list. But still, I think 390 would serve as a pretty good stop loss, 389 to leave a rupee of buffer. And from here, the first target would be 500 rupees. The second target would be 566. First target is based on the point where the real low was established on the daily time frame, as you can see from my yellow outline SR zone. So 500 would be the first target, and the second target would be on the basis of the trend line that has already been drawn here, right? So that would be around the level of maybe um, okay, this previous high also acts like a, so this basically becomes a confluence zone. So going one time frame, yeah, so this, okay, this is also important. Between these two peaks, this is definitely a very, very important zone, right? And other than that, this was also an internal kind of a peak over here since this low was established, the very first peak. Or actually, more than this, I think I would take this as more important, because there is also a gap over here, right? There is a gap over here, and this is where the strong momentum began, which established this low. So I think this looks like a more important resistance. So around 580 is where I would take my second target to be for the stock. All right, moving on. All right, so Sahil is asking for Hind Zinc. So let's take a look at Hind Zinc. So I would strongly suggest to avoid Hind Zinc right now. I think it's in a very, very strong correctionary zone. And also the kind of rally that it has already given, right? That's a very, very difficult sort of a rally to predict where it is going to establish the end of correction of this entire rally. Um, so Hind Zinc, from a short-term perspective, is not a candidate for fresh entry in my perspective right now. Moving on to VBL. VBL has been asked by Mohit. So you can see stock at potential accumulation zone considering the fall from high of 1700. See, I am perpetually bullish on VBL. In fact, this is a stock that I actively swing trade in a lot for myself and my PMS clients. And the underlying trend itself in this stock is just so strong, that I have no doubts that it's going to continue to rally. On the 75-minute time frame, I can see the build up, the beginning of the build up of a positive divergence. It's not yet confirmed, so I've not allocated my cash entirely. I've been buying like really small quantities whenever the RSI kind of triggers the level of 30 on 75-minute time frame. But I think this trend line here is going to act as a strong support around the 1400 level, right? But even below that, I have a support at the level of around 1300. So as it keeps coming down, I'm going to be a buyer on VBL specifically. But right now, I don't see a very clear cut enter now kind of signal for VBL. All right. So we will take some, I will now go through the questions which have been asked by our members on Instagram. So let's see. Let's take it from the top and let's just go over platform by platform. So has anybody got any questions that I can answer? Mm, all right. I don't really see. Mm, all right. Let's take a look at the comments on Facebook or YouTube. So we have a question from Apache is asking how you use RSI. So I use the relative strength index predominantly to get a clear idea of what the momentum of price is, because if you want to do swing trading, short term trading, it makes sense to stay with the momentum. So I like to use a setting of 25 on RSI to reduce the noise compared to the level of 14, which I believe is a lot more noisy. To reduce noise, I use the setting of 25 period on my RSI across all different time frames. And all the different time frames also that I use, if you see, they all have a connection, right? They all are connected with each other by a factor of 5. So it's like every time I'm zooming in, there is a certain level that I'm jumping in to get an idea of closer look at the definition of price activity. And every time I zoom out also, there is a fixed ratio between that, because the market reacts really well to ratio. So it makes sense for me to align my analysis also with respect to these various ratios. um, So Vishal Shah, I can see on YouTube, is asking a lot of stock queries in the comments. As I told you, you need to fill up the stock request form if you want me to take a look at your query, and you need to do it on time. So if there are people who've already filled up the form, they're going to get priority there. Okay. Let's see. So Rameshwar ji on ET Live is asking, is there any book you can recommend for RSI learning? See, in order to learn RSI, it's very important to understand its formulation and its structure. So yes, there is a book by Dahlquist and Kirkpatrick uh, on technical analysis, which I have studied more than 5 6 times, because firstly it was part of my CMT curriculum when I was pursuing CMT back in 2015, and it was part of all three levels for me. So I've studied that book more than 6 times for sure, because for every level I studied it twice. So that is one very good book. But then RSI is just one chapter in the book. I would suggest you get a thorough understanding of RSI, but then there is no one book which talks about the things that I am that the insights that I have developed, like RSI positive, negative divergences, and the RSI range shifts, and how you have to look at RSI against the context of price action and the overall price trends, stages of trend. So right now there is no one resource, unfortunately, that I can recommend to you. But if you do want to learn that in details from me, I'd be happy to invite you to my advanced swing trade training program. Link of that can be found on my website. Let's see. All right. So Prateek is asking, ma'am, is it right time to invest or wait for correction? See, Prateek, the thing about the market is that whether it's a correction or a bull market, neither of them is going to warn you before it comes. Within the bull market, also, there'll be stocks which are in correction. Within the bear market, also, there'll be stocks which will be in rally. So, for you as an individual trader who wants to do active trading, it makes sense to do your analysis and stick to your analysis in an objective manner without letting your biases or external opinions sway your decisions. For your decisions, your analysis or your research analyst's opinion should be the only thing that matter. Opinion of anybody that you're not directly connected with should not matter to you whatsoever, even if the person is coming on TV and saying stuff. The predominant reason for that is, and this is very important, that opinions in the market change They are very dynamic, just like the market conditions. And if you're not connected in person with the analyst, and if you're not part of their communication loop, you will be left out when they change their views. And it's very common in the market. It's part and parcel of the market. Perfect. So let's take a look at the comments again. So we have Narendra. Narendra ji is asking for analysis of NCC. So NCC, again, very, very strong trend. Currently undergoing a little bit of correction. I am waiting for the stock to come down to 270 because that's the previous real high. Right now, I'm seeing a little bit of loss of momentum and the stock is heading lower. So once the level of maybe 269, 270 comes, then I will be more comfortable in taking fresh entry in this stock. Let's take a look at Affle next for Satvik. So again, very strong IT stock, this one, and positive divergence was registered. Stock started to move up strongly. Over here, I can see the momentum topped out. A lot of times you'll see that the real high is different from the price high that was established, and this actually becomes a very good indication of a stock basically looking for a turnaround or a bit of a correction. So instead of doing breakout trading, what I have seen is that waiting for the stock to come back down to its predictive accumulation zone gives me way better results. Way better results, right? So I think this seems like a bit of a confluence of peaks. In fact, this I will not consider as a real peak at all. But the last time the stock rallied, it did establish a real peak right here at the top, right? And now what I'm seeing is that that has been breached and the stock is heading higher. Let's take a look at the overall trend. So the overall trend of the stock is pretty good. The stock has broken out above its lifetime high with very good volumes as per the weekly time frame. Volume activity suggests this uptrend that's unfolding is a whole new leg of rally. My target on Affle would be around the level of 2700, right? And the 75-minute time frame is also suggesting um, so I think this trend line here, this one, would act as a potentially a good entry zone. So even right now, the stock looks pretty good to enter, to be honest, because I think momentum is quite strong and the price activity is heading higher. But Affle, in my opinion, is a stock that's better suited for long-term investing, right? Okay, let's take a look at Chola Mandalam. Okay, another good stock, but like I said, financial sectors, I'm not very uh, in favor of. I'm not very strongly in favor of for short-term trading right now, and I don't see a very clear-cut signal as to why I would want to purchase this stock right away. Because I can see a five-wave uptrend, but not a very well defined bottom to make fresh entry in yet on the stock. So I think I will avoid Chola Finance for the time being from a fresh entry perspective. All right, so Crystal. So Sahil is saying that I've discussed Crystal in one of the sessions and it has come back to retest its previous trend line. Does it look good for entry now? So with respect to Crystal, I am expecting another retest of this trend line, maybe to the level of 40 to 40. That is the kind of level that I'm looking for making a fresh entry in Crystal. Because my overall sectoral outlook is also slightly not so bullish with respect to financial services. Crystal falls in that category. So 40 to 40 is what I would wait for the stock to come back to and retest before I make a fresh entry there or suggest one. Okay, let's take a look at some of the requests that have been filled into a stock request form. Whoa, lots of requests. So fastest finger first. We will go with the request which has been okay, I need to zoom this in because I think I'm going blind. NHPC by Samarpan Thomas. So Samarpan, I can see you've shared your entire portfolio one by one, but unfortunately we'll only be able to look at one stock. So I'll go with the first one, NHPC. 94 rupees is where you've said you've entered. And you want to know short-term target in this. So NHPC is not a very good stock to make fresh entry in right now. Reason is very simple. The momentum as per the daily time frame has already ended here, and I can see the stock is in correction. I would expect it to retest the level of around 75 rupees in the next month or so because of the clear cut momentum exhaustion and some inertia playing out here. But still, if we say draw a trend line, now this has been an accelerated rally which seems to have topped out. I am sensing that you made a bit of a FOMO purchase here. You've made a purchase out of the fear of missing out, seeing, getting affected by also recency bias that recently the stock was in very strong rally, so it is very likely to continue the rally. But the momentum is suggesting absolutely not. So I think you might be on the losing side of this trend. I would suggest you exit and wait for the stock to retest around the level of 75 before you re-enter the stock, right? So this is what I am personally expecting, right? But just my opinion. All right, moving on. So we will take a request from Gaurav Malik on the stock PPL Pharma. Never really heard of this stock. Oh, Piramal Pharma, but never really studied this before. 184. Okay, strong trend, but let's remove the drawings and let's take a very, very fresh look because I think I looked at the stock probably during a live session for someone else. So, very strong channel is being followed by the stock. And let's take a look at the volume activity. Volume activity is also supportive of a continuation in trend, which is good. Which is good. Here, I can see the stock had a real peak which was retested, and then the stock continued higher, and now it seems to be establishing all new highs. So I think this stock will give you a very good entry opportunity around the level of 180 to 178. Take advantage of that, and the obvious target on this stock is going to be at the level of 214, 215. So I think PPL Pharma is a very, very good stock. Thanks a lot, Gaurav, for asking this query. Gaurav has joined us on YouTube. Perfect. For Mr. Mrityunjay Jha, who's asking for the analysis of Tata Steel, so I can see that Mrityunjay has joined us on Instagram, right? And you're looking for the short-term target. So your cost price is very, very recently purchased, suppose probably just today. And like I said, steel sector is looking good, right? But over here, I'm seeing strong volumes on the decline, which is not good. But 250 EMA support, which is good, right? So let's stay objective as we assess things here. So the real peak on the daily time frame was this, changing the outline color to match my time frame. So this was the real peak since this correction, and then I can see the price is very, very close to that level. Um, so this actually, I would like to also capture the next peak because that was also pretty good, backed by pretty good momentum, right? So it acted as support once, but the price continued to go up higher. And right now, the RSI is near the bullish range support. The 75-minute time frame, what is that suggesting? That there was a momentum peak which coincides with the daily time frame, so I don't need to mark that again. And I think Tata Steel is a stock which is better analyzed on the daily time frame than 75 or lower time frames because it tends to, it's a bit of a super mover. So daily and weekly time frame are actually better for analyzing such a stock. So here I can see was a real peak established as per the weekly time frame right here. So just let me put the outline of white. So I think it's very unlikely that the stock is going to come down to correct this, but I am not seeing a very clear cut buy signal right now, because on the 75-minute time frame, if you see this point onward, there was a negative divergence, right? And also the on the 75-minute time frame, the bull range has been violated. The stock is currently in a bear range. What does that suggest us? That we can expect more correction. Plus, the volume, if you see, is picking up on the downside, which makes me uncomfortable. So, I think from a short term perspective, Tata Steel is not looking that attractive immediately, but it pays to kind of obviously follow this stock because the overall metal sector seems to be coming out of a correction. So, this is a stock which is suitable for the monitoring watch list, not something where you should execute a trade in right away. Yes, Mohit. I can see you've raised your hand.
Hi, Kavita. So,
Hey.
in the starting, we discussed about the pharma sector that momentum could be topping out.
Mm-hmm.
But like the individual stock, PPL Pharma, which was just discussed before this talk, you suggested that there could be a potential entry.
Mm-hmm.
So, is it a good idea to look at individual stocks from any particular sector where we see the momentum dying out, or
100%. Your individual stocks analysis will trump your sectoral analysis. Now you have to understand that the formation of the sector does not include every single stocks, and even with these sector indices, though they can give you an indication, they are not giving you very directive or very definitive direction with respect to what you should do. So the stocks which are overweights in any sector index, right, their underlying price activity is obviously going to impact the price activity. So if there is a smaller stock or a stock which is not part of the index, the sectoral index, but has some new developments which are not being reflected on the index, obviously your individual stock analysis is going to be more crucial over there.
got it?
Perfect. So, moving on to Priyanka Nayak's request for analysis of BCL India. Priyanka is with us on Instagram and she wants to know if she can continue to hold BCL India from the short term. So, BCL Industries. Okay, not India, Industries. Okay, so I can see another trending stock. Liquidity wise, maybe not that great. uh, Trend lines, if we draw on the daily, I can see it is currently giving a bit of a nice little uptrend, respecting the trend lines, respecting the channels. And here it established a high, gave a very textbooky kind of negative divergence and started to decline lower. Now it came back down on the daily time frame to the 500 EMA and started to go back up. What is it 75 minutes saying? 75 minutes is showing us that a positive divergence was forged after the stock bottomed out in terms of momentum. So the momentum bottomed out here on the 75-minute, right? So we'll turn that orange. 75-minute, and you can see how this level has repeatedly acted as first support, then resistance, now again support. Okay, so this zone basically is acting as a support for the price of BCL Industries right now. So if you want to make a fresh entry, right, if you want to make a fresh entry, I would suggest you use this as a stop loss level around 55, 54.5 ish kind of level as your stop loss, and it's looking attractive for fresh entry. As per your target, considering the upward channel that the stock is respecting. The very first conservative target, I would say, would be around 76, and the second would be around the level of 96, assuming that the stock is going to continue above this internal trend line and head for the next higher trend line. So Sahil on Zoom is asking that there are several ETFs like Pharma. Can we make short-term swing trade in these ETFs? I have not done it ever, but heard of it from a friend. Sure, if you can do the same analysis, if you have enough price data and if you can do price action analysis on the ETF, go for it. There is nothing harming you there. Yes, Narendra ji.
Yes, good evening.
Good evening.
As you mentioned for the NCC, as it looks, the loss of momentum is there. But if we look at the monthly, this weekly chart, the trajectory seems to be a little strong. And whenever the stock is making a high, it is consolidating for some while, and then it goes for the high. So, as what should be the better strategy if entry has been made at 325 or 318 or 310? So, can we use support?
Absolutely. See, if so, you're saying you already have created a position at 325. Am I getting that correctly?
Yeah. Yes.
So what I would suggest is you use a stop loss at around 245.
245.
Yeah.
That's steep one.
What?
That we have to keep the stop loss steep.
Yeah,
Steep
because see, this at this point, from a short-term perspective, the stock is not attractive. But if you're looking at the weekly time frame, then you are assessing the stock from a long-term perspective.
Okay, so long term means like 3 months or
No,
what?
long term, if you're looking at weekly time frame, you are assessing for a holding period of 6 months plus.
Okay,
Yeah.
okay,
Because the daily time frame right now is showing a negative divergence and is not suggesting that the stock is good for fresh entry at all.
perfect. Then supports can be used for accumulation.
What?
Like the support zone can be used for further accumulation of stock for long term perspective. Like
Even for long-term perspective, if a fresh entry is to be made, I would suggest buying around the level of 277. But for somebody who's already holding on the stock, it's okay to hold on to the stock. If you have possibility of averaging out, then 277 is where you'd ideally want to add more to your existing position. But make sure your allocation doesn't exceed like 5-6% in the stock.
Okay, thank you.
All right. So I can see we've exceeded time. So with that, I come to the end of today's Market Outlook series. Thank you so much for your participation. And you've been great audience. If you have any feedback with respect to the session, I'll request you drop it as comments because I listen to your feedbacks and they help me improve the content, the quality of my broadcast, and so on and so forth. I will be coming live again on Wednesday, 5 p.m. And like I said, if you want to join me for the interactive session on Zoom, then be sure to join my Telegram channel. In the Telegram channel, you'll also see that I've shared in the past some books related to technical analysis. If that is something that you'd be interested in, if you'd be more interested in like studying stuff, doing things in a more, in a better manner than guessing it, right? So with that, I'll take your leave. Thank you so much for joining in. I'll see you on Wednesday at 5 p.m. Namaste.